Group, began his career as a financial service consultant in New York for some of the big Fortune 500 companies. Rohan also holds an MBA from INSEAD and a Master of Education from Johns Hopkins University. Happy to have you, Rohan. And next we have Jerry Kingsley, head of JLL in Sri Lanka. He's an integral part of the transaction advisory business of JLL with over 16 years of experience. He's well exposed to developer operations and corporate real estate practices with over 16 years of cross-functional experience in real estate. He is a seasoned real estate professional with excellent tenant-developer relationships, a strong industry association, and also known for his tenant representation skills. He has managed several such assignments for various companies across different sectors. Next, we would also like to introduce Zayan Hamid. He holds the position of Vice President, Branch Network Management and Product Development at NDB. His banking career expands over 26 years, and he has previously served Al Rajid Bank, Saudi Arabia, HSBC Bank Oman, Oman International Bank, and Hatton National Bank PLC. He is also a chartered global management accountant, an associate member of the Chartered Institute of Management Accountants, and he holds a diploma in computer programming. So we will start off the first session by having a couple of questions for the panel. I'm sure the panel will have a lot of insights and a lot of things that they would want to share about the sector. All three panelists are coming from different segments. They represent the developer side, the banker side, and also the advisor side. So, and then the second session will actually focus on your questions over to them. So you could always post your questions. Starting from now, you could post your questions on your screen below. There's a Q&A and a chat box. You could post your questions there, and we will take them up later on after we finish off on the first session. So, yes, so we will start off with Jerry.
Yes, Jihani.
Hi, Jerry.
Hi.
Sorry,
Good afternoon.
I was wondering for a minute where you were. So, Jerry, with all of your experience in working for different countries and working with all sorts of developers, bankers on real estate, what could you say for us about the global real estate perspective when it comes to investments?
Yeah, thanks, Jihani. That's a very good question. So just to begin with, very good afternoon to everyone who has taken time to join this panel discussion this afternoon. Sri Lanka has always been a very interesting and interesting destination for investments, and it's very appropriate that we are kind of discussing that this afternoon. So warm welcome to all the attendees who have taken time. Greeting to all the fellow panelists as well, Rohan, Zehan, Jihani for moderating this, and a big shout out to the chamber as well for putting this panel together. So if you look at the current market, yes, there is a lot of developments which has happened. And if you look at the global economy now, if you look at the different countries, the different geographies, what we certainly feel is that the economy is at its strongest if you look back even for the last 30, 40 years, right? So that's the clear indication which we are getting. If you look at the different transaction volumes, the interest which we are seeing across different countries, what we have always seen is that whenever there is a recession, the shallow recession kind of sees a shorter period to bounce back. So shallow recession always are shorter recessions. Deeper recessions generally take a longer time to recover However, if you see the 2020 scenario which we have seen, it is actually the contrary. Although the drop was very steep, the bounce back has also been equally fast, right? So in that way, we are definitely seeing a very buoyant economic atmosphere globally. So that's something which is good to know. So as Peter Drucker said, the greatest danger in times of turbulence is not the turbulence itself, but to act with yesterday's logic. So what we are definitely seeing in all our client segment is that there is innovative thinking, there is new ways of approaching the investment decisions which we are seeing globally. So just to throw up a little some stats, the global leasing volumes has increased 44% compared to H1 of 2020. So when we were looking at our data globally, comparing the first half of this year with the previous year, we are seeing that the global transaction volumes, leasing volumes, has increased by 44%. So the exact number is about 130 million square feet, which has got transacted globally. And even if you look at the investment volumes, the global transaction, capital transaction volumes, it is equal to close to 250 billion US dollars for the second quarter of 2021. So that is again gone up by about 100% compared to the previous year, right? So we are seeing definitely large portfolio level, large ticket size deals. We are seeing a lot of M&A activities happening. There is enough capital which is chasing good destinations, good assets, cities of promise, and definitely Sri Lanka is one among them. To touch upon the different segments, what's happening in the office space segment, we are seeing office space slowly getting opened up after this work from home, which has been there for almost 18 years now. So now that the offices are open, what we are seeing is that corporate occupiers are looking at buildings of quality. So definitely there is a lot of flight to quality, which we are seeing globally. And there is a lot of focus on health, well-being, environmental credentials. So it's not only about the office, not only about the rentals, but a lot of these kind of aspects of health, well-being, environmental criteria, which are being evaluated when companies take investment decisions. And a lot of flexibility has been built in the way the office transactions are being negotiated. So we are definitely seeing a good growth of flex space operators. Operators providing flexible solution, co-working solution, right? So that's again something which we are seeing as far as the office space segment. Moving on to residential. Residential as an asset class, which we will be discussing this afternoon, is one of the strongest segments currently post-COVID, because definitely during this period, everyone has stayed in their homes. So that the way we look at assets now is completely different. So residential has definitely bounced back very strongly. So in the Asian region, what we are seeing is there is strong demand for bigger home configuration with the remote working trends here to stay. And what we are also seeing is based on one of the surveys which we have done in this region, we are seeing home buyers looking at larger homes, some home buyers looking at a second home more as a weekend destination, right? So that's again something which we are seeing. As far as the investors are concerned, investors are looking at diversifying their risk. The investors who are looking only at office, they're looking at multiple other asset classes, right? So we've got investors looking at industrial, logistics, mixed use, alternatives, healthcare, hotel, right? So that's again a wide spread of diversification, which we are seeing from the investor segment. So we spoke about office, flight to quality, flexibility. We spoke about residential, where home buyers are taking the decision to buy homes now, investors diversifying their risks. Logistics and industrial segment, I would say, is the shining star through COVID, primarily because this is a segment which has emerged the strongest with e-commerce, technological innovations, and various other aspects, which is driving the growth here. And apart from that, a lot of new non-traditional sectors have also emerged. Data centers, healthcare, life sciences, education, senior care, student living, All of these concepts are also something which is picking up globally. Infrastructure is another segment with all cities going through urbanization. There is a big focus of infrastructure development, which is also driving growth globally. And finally, to conclude, the theme of the environment currently is sustainability, right? So with whatever has happened, there is a lot of focus on sustainability, how to make companies net zero. Many companies have come up with ambitious plans to implement this. So to me, more responsible, sustainable corporate real estate portfolio is what investors are looking at building. So Jehani, this is what we are seeing globally across the different segments.
Yeah. Yeah. So focusing a bit towards individual home buyers' point of view, or the residential unit buyers' point of view, what do you think the expected returns would be? Because I think in Sri Lanka, we've been seeing a growth in the supply in the market. What kind of expected returns can we see? And do you think, with everything that's happening in Sri Lanka with the economic situation, whether this would be the correct time for someone to buy into the condominium sector, buy in a unit? What is your view, Jerry, on that?
Yes, Gianni. So to answer your second question first, is it the right time to buy? We would definitely say this is the good time to buy because of various factors. So if you just look at the raw materials, across the region, we are seeing increase in steel costs, cement costs, even labor cost has increased because of various COVID norms, which has to be followed in the construction sector, right? So definitely input cost has been rising. The raw material cost has increased. Land as a asset has always been on the increase. We've not seen any correction happening, right? So that's again something. So if you look at any built structure, you're looking at land which is appreciating, construction cost which is appreciating. So definitely this would be the right time for any investor and home buyer to look at it. And across the region, we are seeing home loans at a good rate, right? So we have the banker would be speaking about it, but that's again a good indication why we need to look at it. Apart from that, if you look at the urbanization, currently many countries, if you compare Sri Lanka with many countries, Malaysia is about 77% urbanized. Singapore is at about 100%. Places like Vietnam is also at a much higher rate. So definitely there will be more urbanization which will happen. Sri Lanka is expected to touch 30% urbanization by 2030. So definitely there would be capital appreciation also for investors looking at buying the condominiums now. And again, based on our research, what we have seen is through this COVID period, property searches have increased 79%, right? So that's something which we have seen. In other neighboring countries, we have seen property site visits increasing, more discussion on home loans, down payments, right? So all these are good indicators which we are seeing across the region. So definitely we would say that this is the right time to make the decision. And coming to the first part, what is the investment return? So definitely, long-term capital appreciation is there to the tune of at least in the short term of 15%. But if you look at rental yields itself, we are seeing a very good, healthy benchmark, which I would say of 4 to 6%, right? So that's the rental yields which we are getting in the suburban areas. CBD is obviously a bit compressed, primarily because of the fact that the land prices and the apartment condominium prices are very high. So to summarize, yes, this is a good time to buy. And in terms of the rental returns, we would peg it at about 4 to 6%, which is way higher even when you compare the neighboring cross-border locations.
Yes. So in your experience, who buys real estate or who buys into the condominium market of Sri Lanka? Is it foreigners? Is it locals, expats? Does it differ from when you go from CBD to suburban areas? What is your view on this?
Yeah. So what we are seeing, Jihani, is if you're looking at the luxury and the super luxury segment, these are predominantly investors, from outside European countries, Americas, Australia. Increased interest from expats are also witnessed. But currently, what is driving the demand in Sri Lanka is the local investment, right? So that's something which we are seeing in the condominium market. 65% of all apartments are bought by Sri Lankans on an average. 30% are sold to non-resident Sri Lankans, and the other 5% would be to the foreigners, right? So that's something which we are seeing. And Colombo condominium market is a investor-driven market. And we are, because of the fact that there is good rental income and good capital appreciation. And again, if we look at the different segments, super luxury, luxury, mid segment, right, which have been bought by expats and local HNIs, right? So that's again a good indication of investments above 50 to 400 million LKR. Premium segments, which is between 20 to 30 million LKR, those are being acquired by domestic investors, right? So that's something which we are seeing. But historically, if you see JLL being a company with offices in different locations, we've seen interest coming from India, Middle East, from Americas, UK, Canada, different European markets, as well as Australia and the adjoining areas, right? So that's where we get our inquiries from home buyers in different location. And Sri Lanka is again the second fastest growing market in terms of HNIs after Vietnam, right? So with the millionaires and the multimillionaires count which we have, right? So that's again a good indication of investors overseas who would be looking, HNIs here and non-resident Sri Lankans would be looking at investing in this market.
It's quite interesting, Jerry. I think we could also probably get some insight from Rohan onto this as well. I think Rohan, Iconic has invested in several residential projects in the Rajagiri area, and you have a heavy presence. I think it's your second project. And so what do you see for the area? I think the area has improved over the years since you have done your first project. How do you see the area improving? Do you see this as a growth corridor for more developments to come? What is your view on Rajagiri in Colombo?
Thanks, Gary. First of all, hello to everyone. And I think I had the unfortunate chance of going after Jerry, who explained everything so well that there isn't really much I can add. Because just before I answer this question, I just wanted to add a little point to what Jerry said on the timing of investment. Especially in Sri Lanka, and this is from a developer's perspective, unlike, say, the Indian market, where land costs are anywhere between 50 to 80% of project cost, in Sri Lanka, it's the other way around. So the construction cost, the cost of actually building a building is what drives the price. And as these costs are going up, the real estate prices capture that. So what happens in turn is it becomes an extremely safe investment because you are not really exposed to much in terms of price fluctuation, because there is no room for price fluctuation. There's no, the product is basically cost plus a margin and it's sold. And that cost is not changing, the cost base. So it is a great hedge against inflation. And that's why we're seeing a lot of interest in the market. So that's just a point I wanted to add. In terms of Rajagiri, honestly, our personal belief for a while, which is shown out in the success of our projects, has been that we just do not touch super luxury. We try and build products that are catered towards the local consumer. Rajagiri being a perfect example of that. These the land prices and the location of Rajagiriya allows us to basically price our apartments between 40 million to 100 million, which then becomes a much more affordable uh, price point for local consumers. In our case, the ratio Jerry mentioned is a little different. We have almost 70 to 80% are resident Sri Lankans living in Sri Lanka. Another 20-25% are probably either non-residents or moving back and forth. And only a handful of foreigners, and that's only because they may have an office nearby or something like that. So ours is a very local focused market, and in that sense, Rajagiriya is growing immensely fast because it's so well located between Colombo 7 on one side, the whole parliament and government area on the other side, and everyone's expecting the elevated roads and all that to come in. So I think the future of Colombo is not within Colombo municipal limits, but slightly outside, where there is scope for vertical development, where there is scope for roads. The roads are wider to some extent.
Yeah.
So that's really where we see the development happening and where we see residential coming in. And just to touch upon the point of that Jerry made about urbanization, Sri Lanka is one of the lowest. Colombo is one of the lowest urbanization ratios from any major metropolis in South Asia. So it's not that there's anything fundamentally different about the way business is done in Sri Lanka. All it means is that people are suffering extremely long commutes, and we know that evidence bears that out. So there is a massive, massive need for housing, especially housing for middle class, affordable and up. And that's where there just has not been enough demand. So that's not enough supply, sorry. So that's why I think Rajagiriya and areas like that are really where all the action is going to be in the future, or it should be.
Yeah. And I think also the fact that there was quite a bit of shift of government officers from Colombo to Rajagiriya and Battaramulla areas. So it becomes an area where a lot of commuters will also come in and becomes an area of more of a living space.
Fundamentally, if you think about an arbitrage, Colombo 7 is kind of an arbitrary border. Rajagiriya is here, Colombo 7 is there. Colombo 7, a plot of land will cost you anywhere between 14 to 15 million rupees a perch. And in Rajagiriya, it's a fraction of that. So you're living 5 minutes of Colombo 7 and paying a fraction of the cost. I've never seen an arbitrage like this in any market. So, it's quite something. There's a real premium that people are paying just to have a Colombo pin code, which is, I don't think will last in the long run. And it'll be to the benefit of, the Rajagiriyas of the world, the areas surrounding.
So, the condominium buyers of Iconic, is it more end users, investors? What is your view on it? Is it different from CBD again?
Yeah, I mean, definitely different from CBD, because the CBD developments, frankly, I shouldn't be saying this, but I get into trouble for speaking my mind. But I just think that I've never understood the financial logic behind a lot of these CBD developments. Pricing 100 million plus, relying on foreigners to buy, I don't know. It just doesn't make sense to me. So maybe they know something I don't. To answer your question in terms of the type of buyers, so CBD does apparently get a lot of investors. I don't know. We really consider every home buyer to be an investor, really, right? Your home is for most people, it's their primary asset. Even if you're buying a real estate asset for rental, it is still to rent out, it's still a very important asset. Even if you're living in it, it's a very important asset. So the investment component, as far as buying an apartment goes, is always there. Whether I'm buying it to live in, whether I'm buying it to rent out, whether I'm buying it for appreciation. So hence, the reason I'm saying this is that as a developer, it's very, very important that we locate the project in a place and price it in a way that customers are confident that their asset will gain value. So everyone is an investor as far as we are concerned. So then to answer your question a different way, what percentage of our clients end up actually living in the unit? I would say around 70%. Um, and from the balance that don't live there, there's obviously people who buy it for rent, there's people who buy it to flip it. There's some amount, we discourage that. So for example, a buyer at Iconic, we're one of the unique projects where you're not allowed to sell your unit until we finish construction and deliver. So there's no option of flipping. We don't want those kind of buyers. We want people that are serious about utilizing the apartment. So because otherwise it discourages the actual users. So that's one thing which we're very kind of strict about. And from the balance, we see also a lot of people buy it for investment, but also for future family expansion. So we have a lot of cases where a father will have, I don't know, three daughters. So he'll buy 3 units, keep it. So is that an investment? Is that actual user? It's a kind of a gray area. So we get a lot of those, but fundamentally they're buying it because they believe it's a good investment.
Right, quite interesting, and very you've uniquely done up your two projects, and I think both projects have been quite successful, and has clearly changed the landscape of the Rajgiri area. My next questions are actually for both Jerry and Rohan. So basically, I think 2018-19, we went through a tough time period in the market, and there was quite a bit of negative headlines which were making about real estate, obviously because of the challenging economic conditions. A lot of changes were happening on the policy side of things. So, and also I think there was a heavy supply, especially on the CBD area. What is your view about the overall market on luxury and super luxury? Is there an oversupply, or is there an easing of supply happening at this point of time? Because that's, I think, quite important, because even all these projects that we're talking about is somewhat of a luxury product. So a lot of people were talking about this in the past. But what is your view at this point of time? Is there an easing of the supply?
Rohan, please.
Yeah, this is like one of my pet peeves, this word oversupply. The example I like to use is, I know everyone in Sri Lanka loves their cars, so I'll use cars as an example. If all the car dealers are just stocking their dealerships with Range Rovers and Mercedes, and nobody is selling Hondas, and then you say there's an oversupply of cars, that's not true. Okay, so that's what happened in Colombo. There was a huge amount of supply, 100 million plus, 150 million plus, which came up. But the fundamental bread and butter product which people need, which is housing sub 80 million, sub 60 million, that wasn't there. So would you say that's an oversupply, or would you say it's an undersupply? For me, it's an undersupply. And the evidence shows in the fact that our projects are all sold out. If you look at other developers, Prime Lands, Homelands, they're so there is investors share 5-star projects, and then there are complaints when they don't see returns. And then statements like there's oversupply and the market is bad. So there is no oversupply. There is just the wrong kind of supply.
Jerry, your view on it?
Yeah, Jihani. So, if you look at different markets, it's remained the same, right? Even if you look at the neighboring markets, it's the segment which Rohan is speaking about, which is currently seeing a lot of activity. Rohan spoke about some 60 million, right? So those are kind of the products which is seeing the maximum amount of traction. And not only in the current scenario, Jihani, but even prior. If you see, it is the luxury and super luxury, which has kind of been put to the test, right? That's something which we are definitely seeing. But definitely the segment which is kind of underserved is the segment which is 60 to 80 million, right? So that is something which definitely we see there is a lot of potential, primarily because see, if you see home buyers like us, why do we look at investments now? Because of the increased time spent during lockdown. There is more affinity towards self-use among customers. And like Rohan touched upon, especially for a city which is not too large, right? There is an openness and willingness to relocate to a suburban peripheral area to ensure that you get a larger home, to ensure that you get the right amenities, and more importantly, within the budget, right? So those are some of the factors which definitely is playing upon the investor's mind to make investment in this segment. So if you look at the segment which we are currently discussing, definitely there is a lot of potential. It's only the super luxury which is seeing a little bit of probably, I wouldn't say stress, but in terms of the sales velocity, the segment which we are talking about is much higher. So if you look at the various factors as to how this investment decisions are made, so obviously the first and the most important thing is the developer profile. So what we are also seeing over the last couple of years is there is a clear gap between developers of quality and smaller developers, right? So that gap is clearly seen. Customers want apartments of the right size. Earlier, there was a lot of focus on smaller apartments, but now again, with the pandemic, slightly larger homes are something which is being looked at with importance. So we spoke about developer profile, size of the apartment, access to amenities like healthcare, right, is again something which is very important. A lot of focus on green spaces, open areas, less dense environment, right? Good connectivity, good workplace, connectivity to workplace, schools, educational institutions, right? So these are some of the large parameters which investors look at, before making an investment decision. So that's where products which somebody like Rohan is developing is seeing a good amount of traction compared to the segment which is not currently in demand.
In demand. And also, I think another question that would come into that: what do you think? Where do you think the rental yields would be in another year's time? Do you see sales prices improving? It all depends, like what you gentlemen just said. It's the correct. You need to pick the correct product and provided, let's say, the right decision is being made. Where do you think the rental yields would be, considering all things happening in the economy at this point of time? Where do you think the interest with interest rate scenario and also rest of the things happening? Where do you see the rental yields being, and then where do you see the selling prices? Do you see it moving up, or what is your view on it?
See, Jihani, if you look at the overall development, if you look at the commercial market, which we track much closely than the residential market, what we are seeing is there'll be close to 3 to 5 million square feet of space which will come up. And what we are clearly seeing is post the pandemic, there is a India Plus One strategy for global capability centers. We ourselves are working on a couple of inquiries where companies have now looking at big investments in Sri Lanka, in Colombo, to set up their global capability center. So that's one segment which is going to grow. Sri Lanka anyway has a good base of startups, right? So that's again another segment which is creating new growth opportunities. There are new segments of developments like logistics and warehousing, which is seeing good amount of overseas capital, right? So that's again another segment which is growing. So if you look at the broad fundamentals of the city, there is definitely a lot of things which are working towards. So just to address on a high level, there will be a good capital appreciation in the right micro markets. What we feel is in just like in any other city, the prime CBD market is already at its peak. So we've not seen land prices exponentially increase. It's only the suburban areas which has still got that window of opportunity for exponential growth, which will again in turn lead to the increase in the capital values, right? So that is something which we are clearly seeing. And also with the other things like tourism, seeing a steady recovery, right, and more travel happening. Those are again segments which will ensure that there will be capital appreciation and good rental increase, right, in the segment which we are talking about. And again, if you see again a standard research which we've seen, not specific to Sri Lanka but in many other countries, is that the increase in investment in real estate has gone up compared to other financial instruments, fixed deposit or gold. And the other clear trend which we are seeing is earlier the youngsters, the millennials and Gen Z, they were very apprehensive of investing in a condominium, right? Investing in real estate. But again, based on our research, we have clearly seen that over the last 12 months, increase in interest from Gen Z, from millennials, Gen X, with the segment which was actually staying away from real estate. So overall, from a macro level, commercial, industrial, other segments growing. CBD compared to suburban compared to CBD will see more increase in capital values and rental values. And the overall population looking at real estate and through a different pair of lens is something which will drive the demand, Jihan.
Right. So all of that is quite interesting, and I think that gives a really broad understanding about all different asset classes and also on residential. I would also like to ask from Zen what his views are. Like a lot of buyers don't have sometimes the financial capacity to invest on real estate in one go. So I think banks play a very big role in this situation. How are banks supporting buyers? What is your bank? How is your bank helping out on first-time buyers or investors who are interested in buying into real estate?
All right. Good afternoon. Good evening. Thank you so much for inviting me for this session. Just to correct you, it is not simply people come for a home loan not because they don't have money. It is also for investment purpose. They always even keep the money. They want to just spread their risk, beyond a single basket. So it is not purely because they don't have money. So that's a correction that we have to make, because most of the customers who come for home loans, they come with all those intentions. Just to pick from what Jerry said, as the property search has gone up by 79%, or is it currently as much as that, the people who approach us for loans has also gone up to that extent, right? So there has been a great demand for home loans, as again, is not because they don't have money. Not all of them don't have money. It's about, they always try to see, one thing is when you come to a bank, that they ensure that the property is valid. The legal part is fully vetted by the banks. So we don't just grant loans as you think. So, we do all those vettings. So going through the bank has always been taking a protective route rather than simply going and investing. But of course, all those larger developers, they don't have those threats or they don't have those challenges. And also going by what Jerry said, about 95% of these investors are either Sri Lankans or non-resident Sri Lankans. So if you look at overall, as all banks and particularly our bank, what we do is, we keep looking at people from a different angle. We call the customers. One thing is we look at them with how they are going to fund the loans, whether they are salaried or whether they are self-employed. There is a good 35%, according to Jerry, those are the NR, the non-resident Sri Lankans. So we also take them into consideration, the people who are employed overseas and also who have dual citizens or PR in other countries. So we cover all of them. So we offer them home loans to all those segments. So that's one thing. And also, as much as, I heard from both of the other presenters that there is a limiting factor for land in the country. Sri Lanka is a country of promise, and Colombo and suburbans are the cities of promise, where people come out with major developments. Rohan was saying, is about the arbitrage opportunity of investing in Colombo and just crossing a couple of kilometers, then you have a major opportunity of arbitrage. So what we do is we tie up with all those developers. We look at how we can help those customers in terms of their payment schemes. Now that is what we have a diversified payment options. Right? Before I come to the payment options, I heard from Rohan saying that they come and invest for the purpose of investment, rental income, or reselling for capital gains after holding it for a few years. Then some they invest purely for residential purpose. They want to live in these places. As quite correctly Rohan pointed out, it's all about the convenience, given the current traffic situations and the need to, work from a more urbanized area, live in more urbanized area for getting better schooling, etc. So there is a good segment of people who come for residential purpose. The third thing is, again, as Rohan said, they come and invest for the purpose of their children, for their future, right? There are quite a number of customers who approach us. They buy this property for the investment for their children, for their better being, for their better living being, and also, then these children can continue where they're, they can start investing on other things. They don't need to worry about looking after their residence requirements. For all of those, we as a bank, we have solutions. Right now, if you look at, we allow all these types of invest. So for example, if someone is investing for investment purpose, the repayment will be they have diversified options. One is they only pay interest during the period, and then they can pick up a bullet payment either at the end of the repayment period, or they can pick up once in every 2 years, every 5 years, they can do a bullet payment. So that eases off their cash flows. Next thing is they can look at, pay. We also have agreements. Iconic is one of them, where we have agreement where the developer pays the interest during the initial period. So for a year or two, so the investors they don't have the need to pay anything at all. The developer will pay the interest, and they don't pay any capital. The bank will bear the cost of funds for the payment holiday period, which is with Iconic, we have an arrangement for 1 year. So then you will only start paying after that period. So you have a complete period to plan your cash flows. So that's a big benefit by them going in for these kind of home loans and these kind of facilities. Then again, the people who invest at these places for residential purpose, they can go on paying their normal EMI, at their own convenience. We have different repayment period depending on their income levels, depending on their structure, whether they are salaried, self-employed, whether they are working overseas, even if they are working overseas, whether they are on a contractual basis or whether they are on a permanent role or they are professionals. So we have different repayment period that has other variables when we decide. One thing is their retirement, the insurance. We normally, when you go for home loan, there's an insurance requirement that is to protect both parties. So how long the insurance will come? Some insurers, they'll go up to 70 years, 75 years. So those are the variables that we look at, how they can decide their EMIs. The next is when you go for your children, when you are trying to invest this for your children, you can even look at, now there are children who are currently at earning stage. So we can look at schemes for them where they both can, their both of their incomes are their income levels are considered, and then the parents at the beginning will pay a higher amount, then we can step down so the children will not have the burden. So these are the ways that we can look at, making the customer's life convenient in terms of going for these options, particularly in terms of apartments. We look at, if the apartment is fully completed, what I refer to is if they have the COC, they can go up to about 80% funding of the total value. Otherwise, if it is under construction, they can go up to about 75%. And there are exceptions that we always cater into. These are the standard general limits that we always have exceptions to consider. As a banker, this is what we can have.
Right. And I think that was a very detailed explanation, giving such in-depth analysis on how banks support the sector and also individuals on their investment needs. I have a question for Rohan, actually. Now, we've been speaking about investments coming in mostly from locals or basically Sri Lankan expats. But when it comes to the laws, or Sri Lanka has a land alienation law, but then there is an exemption on condominiums. Foreigners can have freehold title. But we're seeing quite little foreign buying. Why is this happening? Need to have policy changes. What is your view on it as a developer? I know it's a bit different from your the market that you're dealing with, but we value your opinion on it. What should Sri Lanka do to come out?
I mean, the reason I am in the market I am in is because I have a view on this, and fundamentally, why would a foreigner buy in Sri Lanka, right? So for me, there's two reasons. One is a holiday home, because there is actually, compared to options around the world, over here we have incredible options for beaches and all of that. That's a separate, I think, issue, and that's a separate market. And unfortunately, the restriction on foreigners owning freehold land has kind of killed the whole villa concept completely. So that's one part of it. As far as apartments in Colombo go, I am still to understand a actual business case for it. Like, why would someone come in here and buy an apartment and live in central Colombo? Yes, we have a vision of port city and Colombo being an entertainment hub and a financial hub, but the reality is not there. It's not yet done. So now you're asking people to buy on the basis of something that may happen, when you already have destinations like Dubai, for example, where that shift has already happened. Dubai is a happening place. You can go there. There's a gazillion restaurants and bars and this and that. So it's a different experience for a buyer. Someone who's buying a second home in a place where they want a bit of freedom, they want it now. I don't think they want to wait for that to develop. And unfortunately, the news coming out of Sri Lanka, for whatever the press, whether they hyped it up or not, has not been good, right? Since the change of, there's been the constitutional crisis, there's been the Easter attacks, there's been COVID, there's now the foreign currency crisis. So again, if I'm looking to invest in an expensive apartment and I hear that, for example, I'm being asked by so many people, what's going on? Why are you not able to get your money out? Why are you investing in Sri Lanka if you can't get your money out? I have to explain to them, listen, I'm long-term here. It doesn't matter, 6 months, it'll all be okay. But sometimes people think I'm crazy. They're like, why are you doing this? Why don't you just go invest in Dubai? So, they don't for someone who's not a sophisticated investor into Sri Lanka, and they're looking at a global portfolio of investments, Dubai, Singapore, Sri Lanka, I'm just not seeing a compelling case for Sri Lanka yet.
Mm, mm.
And I think that's fundamentally why it's not working.
Yeah, yeah. So I think we're quickly running out of time, but since we have to also take up the questions of the audience, we will now take a very quick break, and we would like to share some insights from Iconic's latest development. And when we come back, we will open up the platform for questions of the audience. Once again, I would like to remind you could post your questions on the chat box below on the Q&A, and we will see you back again after this small break.
One10 Parliament Road was our first project in Sri Lanka. And in the end, it was one of the more successful real estate developments in Sri Lanka in recent years. Of course, we've learned a lot from the first project, and we've tried to take all these learnings and put them into our development plan for the next project. We're especially proud in this project to be working with architect Samira Rathod, who is an award-winning architect nationally and internationally. We believe that she can draw from Sri Lanka's architectural tradition and still give us the building of tomorrow.
Challenge for us was to really be able to meld the idea of the green Colombo into a tall concrete skyscraper. I feel that if I can add poetry to the idea of building, then we have architecture. Each of the terraces are divided into different kinds of gardens. So you have a tea garden, you have a garden of grasses, you have a fragrance garden, where we hope to attract a lot of butterflies with a little deck from where you can see the whole of Colombo. You have a small amphitheater, and to top it all again, we have a little observatory on the top with a magnificent telescope, so you can watch the stars, look far into the galaxy, where it gets its name.
Iconic Galaxy is designed to become a Rajagiriya landmark. This elegant tower will rise 33 stories above the city at Rajagiriya's most prime location. With luxury retail, quality schools, hospitals, high-end hotels and restaurants all within easy access. The development has 2 entrances from Kamatawata and Butgama roads to help you beat the traffic. You enter a grand car drop and high-speed elevators whisk you up to your spacious, air-conditioned apartment. Every surface and fitting from the bathroom to the kitchen is of the finest quality import. From up here, you'll enjoy unparalleled views of the city, the golf course, the lush canals, and the Diawana Oya. Iconic Galaxy has over 45,000 square feet of amenities, more than any comparable residence. Everything you need to live a truly global lifestyle. The pool and spa complex is where you can take a morning swim, unwind with a de-stressing massage, or even play a game of squash. Club Sky, spread across 7 levels, has everything you need to entertain, unwind, and stay active. Stay fit at the state-of-the-art gym as you gaze at the Colombo skyline. The indoor games room means you'll never have a dull moment. Set your kids loose to enjoy the indoor play zone and library, while you host the cream of society at the Grand Banquet Hall. Luxurious guest suites are perfect for when family and friends come to visit. You can make a booking at the private theatre for movie nights, or even attend to some work at the in-house business center. The perfectly landscaped rooftop gardens provide multiple venues to relax or be social. Meet friends for a cappuccino at the rooftop cafe, gaze at the stars at the observatory, or maybe just sit under a fragrant fruit tree while the kids play under the open sky. On-site conveniences like the supermarket, laundromat, and car wash mean everything is taken care of for you. Professional property management by JLL leaves you free to enjoy every moment, and should you require, they can even help you rent your apartment. With a lifestyle that ranks among Colombo's best, iconic Galaxy is where you can truly have it all.
The Galaxy by Iconic is not just a building, it is a home. And as Samira likes to say, we hope it will be poetry.
Gihani, on mute.
Sorry. So we welcome you back. We have a couple of questions that's coming in from the audience. I'll take up the first question. I think there's one question about, again, about foreign buying on condominiums. They would want to know whether there is any restriction now on for foreigners when it comes to buying condominiums. Earlier, there was a floor level, and above that floor level, only foreigners were allowed to purchase units. Is this law still applicable? So I think that is a question that they would want clarification on. So either Rohan or Jerry, if you could take that over and just explain a little bit about it.
Yeah, so as far as the foreign buyers are concerned, earlier there was a restriction, but recently that relaxation has happened. So now foreigners can buy any floor. Previously, they could buy only above the fourth floor, but now the government has kind of changed it. So in that way, it's at least a welcome move for that restriction to be lifted. However, as various questions are coming in, there are several other factors which can be looked at holistically to improve overseas investors looking at the market here.
Right. Also, we have another member from the audience asking, what is your view on condominiums in Kandy? So I think we've been speaking about CBD and suburban areas. Because this particular person has a couple of apartments and they would like to understand the prospects for condominium projects in outstations from Colombo.
I don't really have much experience in Kandy, and the reason being that whenever we've done any due diligence around real estate developments in either Kandy or even in South and around the Gaul area, there's just not enough of a market for it. So I think that probably answers your question. I don't know if Jerry has something different.
Yeah, I would second that, Jihani, in terms of the market. Currently, it's more for travelers only, right? So one, in terms of the demand which is there, we are seeing more in the suburban areas closer to the primary city, which is Colombo. And secondly, with currently, with the infrastructure projects which are still underway, it would take some more time for that market to see apartment demand. And thirdly, I think from the pricing front also, for the audience question here, 100 million, we feel would be on the higher side.
High side, right. Another question, bank limit loan repayment terms, maximum 5 years for Sri Lankans, non-residents. Is this limitation still applying for banks? If so, what is the impact on the investment? Zan, if you could take that and give us some thoughts.
Yeah, see, this is what I stated during when I was addressing. See, basically, it all depends on the type of employment you have. Firstly, type, you are an NRSL. Are you employed overseas, or are you a dual citizen? So we need to know about that. The other thing is, if you are employed overseas, then again, it depends on the type of contract you have and your category, whether you're a professional or whether you're a business investor. There are various other ways that you can look at that, but we go up to about maximum 10 years, but with a minimum of 5 years. So you can pick between 5 to 10 years. I cannot say without knowing that person's exact condition. I really can't say what is the limitation.
Right, right. Another question. There is, so this particular attendee is mentioning that there is doubts and uncertainty in the minds of clients on projects to be completed in the year's time. I suppose there are certain projects which are on hold and going through some difficulties. Jerry, would you like to just probably speak about that and share some of your thoughts? I suppose in any country there might be projects like this. Would you like to share probably some of your thoughts?
Yes, Jihani. So this is a very good question, because for any home buyer, any investor, unlike other investments which we make, this is a once in a lifetime investment. So it's absolutely important that the right decision is made. So what we as a consultant generally advise our customers is obviously to look at the developer profile, right? So whether the developer has the credentials to execute large project, is there previous track record of developing a similar project. Thirdly, to see if there is a financial closure for the developer to execute the project, right? To ensure that the developer has the liquidity which is required to ensure that the project is completed in quick time, and also to ensure that project completions of previous project finished projects are safer investments, I would say, from a home buying perspective. So that's why developers like Iconic and others who have built projects executed, who have credentials of customers who can talk for them, would be a very, very critical criteria. In other markets, quality is a concern, but at least from what I've seen in the Sri Lankan market, that is at least not a big challenge in the Cat A developers whom we would look at. I would probably pass it on to Rohan also. Rohan, what would be your advice to a home buyer?
This is a question we have to answer every day. When you're buying an apartment, absolutely you are taking a bet on that developer that they are going to complete and they're going to give it to you. So very important to do your homework on the developer. And I'll just let you take a peek behind the curtain. Where people get into trouble is on financing the project. So what is extremely important is that, number one, for example, what we commit on all our projects is that project advances that the buyer pays remain in the company. They're not used for another project ever. So, we ring fence. Good developers ring fence. So money doesn't go from here to there. When you see projects that are stalled, either they've taken money from one project and moved it to another and done something like that, or the project didn't sell, which means they didn't come up, their concept and their planning was wrong. So just two things to look at when you're buying: how reliable is a developer, and especially around, are they reliable in terms of managing your money? And number two, do you believe in the concept? Do you believe, for example, we are now going to be launching 2 bedrooms in Rajagiri and 100 units, 150 units. If you think that that's going to sell, it'll fill up, then you should go for it. If someone's telling you that they're going to put up 700 units in Kandy, I would be a little careful. So common sense is needed.
Right. Another question on Port City. What are your views on Port City, and how would it affect the real estate in close proximity? I suppose what the attendee is asking is, how would it impact the immediate vicinity of the Port City? Jerry, would you like to start off on that? Yeah.
Sure. Yes. So Port City is obviously the landmark or the iconic development which is currently happening in Sri Lanka. And as Jailil, Gianni would also agree, being in a similar space, we are seeing a lot of investor interest from the overseas market, from Middle East, from Asia, Japan, China, and other locations. So definitely, I think that is probably going to change the landscape of the country. And we are doing a lot of work to see how it can be replicated like a Dubai Financial District or a Canary Wharf in London, right? So those are the international concepts which are being looked at. Definitely, it's very visionary. And at least from the initial feelers which we are getting, putting up 60 million square feet of development, it's like putting up an office stock in a city, right? So that's a very, very large development. So there would be a spin-off benefit in terms of the valuations in the neighboring market. So definitely, I think once the project starts seeing ground, right? Once the construction commences of the first few plots which are being promoted, definitely you would see more interest coming up for the project.
Any views from you, Rohan, on that?
I don't really have much more to say on Port City.
Okay, so I think there is a question from the audience again asking, is there another new project coming from Iconic anytime soon? Could we, are you in a position to talk about it, or are you all planning anything? Because
Yeah, I just typed a reply to that. Well, you heard it here first. We haven't announced it yet, but we have procured. I guess the question is coming because a lot of people are aware that we bought a large land parcel, another one in Rajgiria. We're planning to launch in January. It's a fairly interesting and unique product. And we're going to be opening in Jan for a pre-launch, which mainly is for our existing customers and our existing customer base, because we get a lot of requests for second and third purchases. So I have to satisfy them first. For people that are on this forum, if you just drop your email address, and if you want and you're interested, we'll have you guys added to the first round. At least you'll have the option of buying it. So I think whoever's here from the Chamber of Commerce can just maybe coordinate that. That would be great. We'd be happy to help. So yeah, it's coming up in Jan, and it's a really cool concept, and I'll give you all more information then.
right, and another question on what are the key factors affecting price of apartments in Colombo, Sri Lanka? Again, I suppose for Jerry and Rohan.
Yeah, I can take that. Colombo, 20% of your project cost is land, 80% of your project cost is construction. Just to understand, cities like Mumbai, it's the other way around. 80% is land, 20% is construction cost. So that's why, according to the actual cost of the inputs is what drives the price of apartments in Colombo. Right now, for example, the government has come up with extremely strict restrictions on imports for obvious reasons. So we're going to see a price increase in apartments because everything's going to be more expensive. So when input costs increase, apartment costs increase. There is really nothing else. And in terms of inputs, cement and steel are about 40% of your project cost, roughly. Your civil is about 40%, and then everything else. So any restrictions on imports, duties, taxes, the tax-free status for real estate development is more or less gone now, unless you're a really large development. So that's also going to impact prices. So new projects, I'm seeing them coming up at a much higher price than what we're used to.
Right. I think we also have a very good question coming in. So the last question discussed of foreigners not buying apartments in Sri Lanka is due to the fact that they are not entitled to long-term residence visa based on property purchase compared to other countries in Asia and UAE. This is a major hindrance. If somebody buys a property, they would definitely want to stay on long-term basis. I would like to ask the panel to what is prevailing on this side or on this matter. Would there be any changes in the policy decisions? Is this an actual hindrance? What is your views on it? I think Jerry and Rohan and even Zen, if you could share your views on it.
Yeah, Jihani. I mean, my only observation is yes, there would be, there is definitely more to it in terms of improving the current investment scenario to see how we can get more overseas buyers. Currently, there are some slabs for foreign investors for certain amounts, right? So that slab is there, but definitely, as the audience have mentioned, it can be improved, to ensure that there is clear tax policies to repatriate the money to the domestic market, right, to make the whole fund flow smooth, right? So there is work which needs to be done together to see how we can get more home buyers, right, into the market here.
Right. Any other views on it?
Yeah, Gihani, now, given the interest in FDIs and the way we attract FDIs, I think having this kind of facility, replicating what Dubai is doing, is going to be a morale boost. It's going to be a complete boost to the economy. So I think it has to happen at some point of time.
Yes. Rohan, any views on that from your side?
No, none.
Okay. Yes, so I think there was also another question. I think it was mostly a concern coming in from a unit buyer who's saying that he is not getting connected, even though his apartment is 25 million. It's very difficult to find, get connected and find an opportunity for a sale. Why is this happening? Jerry, what would you advise this particular unit buyer to do? Because there is so much of options. I think there's so much of brokers and also online platforms that assist these transactions. What are your views on it, and how could we address this concern of coming in? I think it's more of a middling, something like a mid-luxury product that he's referring to.
Got it. So the question, Gihani, is the attendee here wants to buy an apartment in that value, is it?
No, I think further to the question put earlier, even to find a buyer for one apartment with 3 to 4 bedroom at 25 million is so difficult. I'm thinking he's
looking at
sorry, I think he's speaking from a buyer's perspective. What he's saying is the affordability factor, that the pricing of the units have now gone up steadily, and it's quite difficult to find something for about 25 million, that range. Again, I think if you could share something on that, yes.
So obviously, affordability is a very relative term, right? So it kind of varies depending on the location, depending on the product, the size, and various other factors. So one, from a buyer's perspective, I mean, just to understand the question, in case if there is a need to buy in this ticket size, we definitely have to go further away from the city to see if there is any options, which are available. Secondly, the key thing to be kept in mind is when you come too low in the budget, then you get into the unorganized segment as well, right? So you don't want to make an investment in a project which will not be delivered, right? So it's like a fine balance which we need to look at. But if the question is, why am I not able to sell, an apartment for 25 million, which the attendee currently owns, I think we'll just have to channelize it in the right manner to see if the right consultants or the right advertisements are kind of taken out for the property. And obviously, unlike the other financial instruments, we cannot time this, right? If there is an immediate need to liquidate, obviously you might not get the price which you are looking at. So we definitely have to make these investments plan accordingly, so that we don't have too much of capital erosion.
Right. Also, I think another question coming in is on the construction side of things. I think lately there has been quite a bit of increase in construction costs because it's been quite difficult to open LCs and of the dollar situation in the country. What are your views on this, and how would this overall impact the residential market, or even the other segments of real estate? We would appreciate views from all three if possible.
Sorry, so your question is, how does the foreign exchange shortage affect the real estate market? Is that the question?
No, actually, I think the construction cost has been going up. I think a lot of the key material cost has been going up. Also, it's been quite difficult to open LCs from banks in terms of bringing material down. All of that as a result is leading to a construction cost increase. So your views on it, how would that impact the real estate market? Is this something short term? Appreciate your views on it.
So you need to look at, it's going to affect each developer differently depending on where they are in their project. In our case, for example, we're quite lucky that we are the end of one project and the start of another. So costs can go up. It's okay. We've already spent 90% of our costs in the current iconic Galaxy, and we have not spent anything. We've not launched the new project yet. So we are very minimally affected, but to tell you the truth, simple things like we can't get, our kitchens imported right now. And we've been, actually NDB was very, very flexible and kind and really helped us get these problems sorted. So, developers, like every businessman in Sri Lanka today, is really kind of working with their bankers and trying to solve this problem. So it will lead to two things. One is definitely a cost increase on imported components. Now, those that have not done their, scenario planning well, as a developer, before you start a project, you should anticipate some sort of, issues. So it depends on how much safety margin you've kept, and those who have not might be in trouble, those developers, combined with whatever issues they faced due to COVID. So it's come, on the back of that. So I think this kind of also taps into the whole, what happened during COVID. Some developers have done really well. Some developers have collapsed. And really a situation like this, they say, a rising tide lifts all boats. And Warren Buffett used to say, when the tide goes out, you know who's swimming naked. So the developers who were not well structured, who are not financially sound, who have questionable practices, they can't survive these kind of bumps. So that's why you will see people get into trouble. You'll also see people coast through because they've planned for things like this.
Right. Another question, what are the impacts of the present low interest rates on housing available and even on condominiums? Any views? Have there been any improvements in pre-sales? We would appreciate, again, Zan's opinion on it also, coming in as a banker, and also probably from Rohan coming in as a developer.
Zan, do you want to take this first? I think this
Yeah,
is your...
I'll take it first, Rohan. Interest rates, actually, currently, the interest rates are on the verge of going up. But however, there are varying rates that we apply for home loans, because home loans, there's a national interest as well as there's a bank level interest as well on the home loans, by virtue of that being a safe investment for the bank. So the interest rate will vary, from a low rate to about a moderate kind of a rate. So therefore, it's a range. So what the investors should do is take advantage of this situation and then invest on the home loans, invest on apartments and other real estate opportunities to get the benefit out of this. Rohan, to you.
we do think that it's been a contributing factor in the increase in interest in homes. I think Jerry would have a good view on this. Historically, the single largest thing that changed, I mean, where I'm from in Bombay, we had through the early 2000s up to the mid till about 2010, 2012, possibly one of the largest real estate booms in human history. And I think a large part of that was because of liberalization of the financial sector and availability of easy financing for people to buy homes. So nothing enables real estate purchases like low interest rates and affordable mortgages. So long duration, low interest rate mortgages. That's just the most basic thing which would allow property ownership to go up in an economy.
Right. Jerry, anything you would like to add?
I think it's covered, Gianni, whatever Zihan and Rohan mentioned, right? So in terms of various factors which we are seeing, nothing to add.
I think we've answered most of the questions that has been coming in from the audience, and also we have a time limitation factor. So I think it is time for us to wrap up things. And first of all, I would like to thank all of the participants who joined in today. We hope the session was interesting, and also you learned something today about the real estate sector and on investments that you could make. And also we would like to thank this team panel for taking time off from their busy schedules and coming in and sharing your knowledge with all of us. All of the knowledge that you imparted today is quite valuable. And I'm sure it will help the audience in a big way. And also we would finally like to thank the Chamber for organizing the event, and also for Iconic Developers for also sponsoring this and making this event a possibility. And finally, I would like to tell everyone stay safe, and goodbye for now. And until we meet again with another insightful webinar like this, goodbye.